Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this October 31st, the last day of October, 2022. Halloween. Anyway, listen, I'm going to talk about multipolar world. In my mind, it's more like a bipolar world. Anyway, let's get started and take a look at what's going on in the markets today. And let's get started right now and open up the charts right here. How the war in Ukraine shapes a multipolar world. Uh, Basically, what this amounts to is divisions between East and West, and divisions between countries, and the countries are reassembling and reassigning who is going to do what and where. What we're looking at is a reshaping of the entire world order that's happening right now in front of our eyes. So war is something that makes change very, very quickly. It says how the war in Ukraine shapes a multipolar world, and one of the key things here is China. Which way are they gonna? China's sitting back right now, and they're watching all this happen and unfold. It says had China backed Russia, like the EU and the U.S. backed and the EU backed the United States and Ukraine, that would have been a tipping point for international politics. It says the world would have fallen apart again into two rival blocs. But it's not over yet. The Chinese right now are sitting back, like I say, and they're watching this entire confrontation unfold in Ukraine. And there's a reshaping. Now, if we go back to, into the 1940s, we had the Bretton Woods system. Started in 1944 during the Bretton Woods Agreement. And the world was kind of based on the dollar. This is basically basing the world on the dollar. And they set the dollar. The United States set gold at $35 a troy ounce. Now, you can just see this with the price of inflation now. How, they tell us, okay, for years they said we were under 2% inflation. And now they say we're at 8%. Well, to qualify that, like yesterday I bought a quarter of a sheet of plywood. And when I was a young guy, that same plywood was $7 a sheet for an entire sheet. Paid $26 for a quarter of a sheet of plywood, called a handy panel, And I find this interesting because that means a full sheet would be over $100. So from $7 to over $100. Now, if we figure them saying inflation is around 2% or less, which is what they said that we had for years, you wouldn't see it. It would take 50 years to double the price on something, But that's not what we see. We see the price is not doubled. It's went from $7 up to over $100. That's doubling and doubling again and doubling again. So they're not giving you the straight skivvy on exactly what inflation is right now. And this is the erosion of our money, and this is going to continue. And this is what the Fed's trying to fight right now, is this erosion of the money. But they're not going to be successful, and the only reason they're trying to fight it right now is because it's getting really bad, and they're scared. They're scared it's going to really run away on them, and we're going to go into something called a hyperinflation. And in fact, they really can't stop that without entirely shutting the economy down. And so that's where we're going with all this, a reestablishment and a change in the entire world order happening right now. And getting in there, let's take a look at the silver price today. We are down 11 cents today. so far. This is the only thing that is one of the few things out there where the price is not going exceedingly high. Everything else is moving up in price, except gold and silver, you know. And I could see the time coming if this effect were to continue. But it's not. This is not going to continue. But if this effect were to continue, where the price on everything else is going up higher and higher and higher, that steel would be cheap, would be more expensive than silver. I mean, something wrong with that. So let's not make our cars out of steel anymore. Let's make them out of silver. Something's wrong. You know something's majorly wrong, because if the price of things that are made out of other things like nickel, copper, if the price continues to go up on those metals to meet the price of inflation, but gold and silver are not meeting the price of inflation, something's wrong. It's being held down. And this has been going on for a long time now. We're getting ready for an explosion in the price of gold and silver, because it's going to have to come back up to meet to cancel out all the suppression that's gone on for all this long period of time. So, you know, it takes an awful lot of work to get an ounce of silver out of the ground. And you guys been watching my show. I've been talking about this for a long time. But I'll tell you exactly what it takes. It takes hundreds of pounds of rock that they dig out of the ground. And then they have to take those rocks and they have to quite literally crush them until they're a fine powder. Hundreds of pounds of rock. And then they have to add chemicals and stuff and put it in a water slurry and separate the silver from those rocks. And then they have to use heat to process that silver down into that coin you buy. And that all costs energy. And you know, energy prices are going up. And so when you buy an ounce of silver now, at this point in time, you're actually buying labor. You're buying energy. And it's not a whole lot above the cost of energy, because they've suppressed the price for so long. And so where are you going to put your money nowadays? You got all these money products out there, and the system's wanting to deflate because of what the Fed's doing. And so it's not such a great deal, you know, to try to look for yield anymore. Right now, it's a time to look for safety. Look for insurance of maintaining your purchasing power rather than trying to gain above the cost of inflation. You got the Fed out there, and they're slowly raising interest rates. Why? What's one of the other reasons why they're raising interest rates is they don't want people to say, hey, you know what, I'm not earning any interest on my money. The cost of inflation's far higher than the amount of interest I can earn, and taking their money out and trying to find some place to store it where they can maintain their purchasing power. Basically, I guess what I'm saying is the real winners out there right now are going to be the people who can just maintain their purchasing power through all of this and keep their wealth through what's happening right now. And it's a very scary time when the geopolitics of the entire world is changing. The old order of Bretton Woods is being reestablished with some new form of new order that's happening right now in real time. And war, right, is driving an awful lot of these things very quickly. It's like it's all speeding up. Let's take a look at cryptocurrencies today. What we're looking at is a Bitcoin price of 20,350 and an Ethereum price of 1567. Let's take a look at the stock market today, and we're down 142 points on the day so far. So we're trying to re-enter back into this. I don't think we ever left this bear market. I think we were having a rally in the middle of a bear market. Take a look at this chart over a period of, say, a year. And, well, let's go back a little bit longer than that. Let's go back to the 5-year. Take a look here. And obviously what you can see is the market's peaked. And anybody who's into charts can see this downward slope right now, even though we're having a little pop right now. We're turning over and we're still in this downward slide. So the next target in this would be around 27,920, around 28,000 would be the next target. Next in the next drop. That would be the next target until this bear market's over. And this bear market's not really going to end until the Fed shifts and changes direction in their policies. So we're going to continue this downward slide. This was quite a bounce, though, I must admit. We went from 28,725 and we peaked at, was it 32,737. Okay, let's take a look now at crude oil. $87.46, down 44 cents today so far. Let's take a look at the MOVE index, 144.60. And we're finding a little bit of stability in the MOVE index, and that's because we got the dollar going up. And, you know, bond yields are starting to reach the peak of what the Fed's going to be able to do. Because they're planning for a big 75 basis point hike. And this is, I think, the fourth one of these 75 basis point. Plus, they did a 50 basis point when they started. So they're starting to get it up to where I'm not going to say they've normalized rates, but they're getting it up probably close to as high as they're going to be able to get it up pretty soon. They're going to meet the wall. I think this is maybe the last 75 basis point rate hike until something happens, something breaks in the system. And we get the pivot. We're going to get a pivot. It's starting to look now like the pivot has been delayed a little bit longer than I thought it would be. And the markets haven't went down as low as I thought they were as quickly, but the markets could drop rather quickly now at this point. And I put in that initial target at 26,000. And the pivot hasn't happened yet, and we might actually hit that target before the pivot. Even though we're well over 30,000 right now. Let's take a look at bonds and rates. And we're seeing bond yields are climbing today. We're looking at the 10-year 4.04. It's up 3.2 basis points. And the U.S. 30-year is up 1.6 basis points at 4.14. And now let's take a look at the U.S. dollar index, which is going up really fast today. It's 111.54 on the day so far. This has been your show, guys. Thank you for tuning in. Don't forget to hit that notification icon so you get notified when my video comes out. And you might have to check that once in a while, because sometimes for one reason or another the notification icon, the notifications stop working. I guess I've heard of that happening quite often. You just make sure click on it. Make sure it's been clicked. Catch you guys in the next show, and you guys have a great afternoon. Bye-bye.